Hello, good morning, and you're watching Buy Now, Sell Now on ET Now with me, Vinny Motiwala, along with me, Cheryl D'Souza as well. Cheryl, a very good morning to you as well. Market's a bit subdued, right? 19,700, again, we are below that mark as well today. So nothing exciting happening, at least on the benchmark indices front.
Absolutely, a very good morning to you, Vinny. And like you said, subdued moves coming in for the benchmark indices. As you can see, we are still below at 19,700 mark. Choppy day of trade coming in for the benchmarks. Let's take a look at what Nifty Bank is doing, because that one is underperforming the benchmark indices once again. It's actually trading lower by about 0.3%. In fact, near the day's lowest point coming in for the Nifty Bank. If you look at the advanced decline ratio, still very much in favor of the gainers. So hopefully we will be able to reverse the course, but who can say? Markets have their own course that they keep charting every day. Talking about the list of gainers, then you have Eicher Motors that is actually firmed up in trade today, 3% uptick coming in for that one, followed by Tata Steel, Bajaj Auto, as well as Dr. Reddy's seeing good moves, or add to that list, as well as NTPC seeing a good strength in today's trading session. On the flip side, you have the Bajaj twins that are not doing that well. In fact, only Bajaj Finserv actually is down 1.5% as we speak. Top loser on the Nifty, followed by Kotak Mahindra Bank, Asian Paints, Tech Mahindra, as well as IndusInd Bank. Let's take a look at what the sectoral indices are doing. Then only the metal index, or rather the metal index, is the top performing sector in today's trading session, seeing gains of about 0.8%. You have auto index also holding on to gains. Broader market seeing a positive uptick as well. But on the flip side is the IT index, the banking index, the pharma index that are actually taking it easy. So that's the way how the market setup is looking like at this point in time, Vinny. But I'm definitely all eyes has to be on big boy Reliance Industries, isn't it?
Absolutely, all eyes are going to be on that one. And why? Because obviously when you look at it, Reliance is actually the only Nifty or 50 or so stock which is in the oversold territory as well. And when you look at it, it is falling for the fifth straight session. So why is it falling? What is ailing Reliance? Let's decode that on Buy Now Sell Now lens today. And to decode that, we have Somit joining in us as well. Somit, what is it that is impacting Reliance? Being the only Nifty stock being in that oversold territory, that's a very big thing that actually comes in for Reliance.
Well, firstly, if you see, every time in the last 5 years, whenever the stock has been in the oversold territory, to be precise, it has been in the oversold territory around 8 odd times, and after a brief consolidation around those levels, the stock has always managed to gain. Now, coming back to your point of what is the reason why the stock has been underperforming of late, fundamentally, if you see, recently the company had announced that they will be shutting down the refining unit for some period of time, and analysts believe that that could impact the company's earnings by around 1 odd percent. But more importantly, why the street could be negative on this fact is because GRMs, when the news was announced, at least that time the GRMs were trading around $15 per barrel levels, which were at a higher levels, and hence the street was a bit disappointed with this shutdown announcement. Apart from this, investors and shareholders were expecting the company to announce the demerger of the retail and telecom arm. Now, this could be one of the key triggers for Reliance Industries. However, the company did not make any such announcement, and hence there was some disappointment among the investor community as well regarding this. Now, the O2C earnings, this has been one of the cash cows for Reliance Industries, and this segment earnings are expected to be weak given the fact that of late, GRMs, that is Singapore gross refining margins, have come off from their highs of around $15 per barrel level to around $19 per barrel. Apart from that, the petrochemical margins are also weak owing to delay in Chinese demand improvement. Now, in petrochemical, if you see, the polymer margins continue to remain weak. The PTA margins remain near the break-even level, while the paraxylene margins are on the stronger side. Overall, the petrochemical margins, however, continue to remain weak. Also, in the previous earnings, previous quarters, Reliance did benefit because of higher imports coming in from Russia. But currently, if you see the crude discount that the company was getting because of Russian crude import has also narrowed down. So that could also weigh on the company's earning going forward. And lastly, there has been still no tariff hike when it comes to the telecom business. And without a tariff hike, what we have seen in the past 4 quarters is that the telecom business grows at an average growth of only 2 odd percent. And tariff hike is the only thing that could lead to a higher growth when it comes to the telecom business. Hence, these are broadly the factors why Reliance Industries has been underperforming the benchmark. The benchmark is up up around 9 odd percent, but Reliance is up just 1% on a year-to-date basis.
All right, so that's the reason why Reliance Industries is underperforming, is what you have to say. You also spoke about the technical aspect, given the fact that's the only Nifty stock which is in the oversold territory. So let's actually pose that question to Kunal also, because we have Kunal also joining us in the studios right now. Very good afternoon, I beg your pardon, good morning to you, Kunal. And let's talk about what's happening with Reliance Industries. We had Somit just now actually decode the fact that that's the only Nifty 50 stock which is in the oversold territory. What are your technical analysis or indications telling you about Reliance Industries? When is it all set to actually go back into the positive territory? When is it going to get over from the oversold territory as per se?
See, I think there are 2 points over here. One is, of course, that the stock is oversold, which means that entering the trade over here could be very, very attractive. And I think Reliance is one of the stocks which is not from a short-term trader friendly kind of a stock. It generally tends to reward for traders who have positional time frame or higher degree time frame for themselves. The other way to look at it is Reliance has also come back towards its 200 moving average, which means it's completed another round of mean reversion for itself. And we typically tend to expect that whenever a stock reverses and comes back towards its 200 moving average, the risk reward to enter those stocks becomes all the more lucrative. Now the only question is that if the stock is into extreme oversold territory, we ideally would have expected a bounce on an immediate basis. But the bounce is not happening, which means that maybe some more pain could be left. Another 50-70 points on the downside could be expected. But that should not deter a positional trader for investing into the stock at current levels. So net-net, my belief is that at current levels, traders with a higher degree time frame should look to start buying Reliance Industries.
Right, okay, that's the view coming in from Kunal on Reliance Industries, but also we have Sharmila Joshi joining in with us as well. And Sharmila, very good morning to you. And what is your view on Reliance? All the technical fronts, yes, the indications coming in there, but fundamentally, Reliance Industries, would that be a buy for you?
Yes, in a single word, yes. And while I've been listening to the sort of cons against it, but I think you need to keep in mind one, that their base, their business, their petrochemical business, which is their base business, has stabilized. It's now that we are a mature business, and honestly, I don't think that anybody who buys into Reliance at this point in time is really looking at that to sort of give them the growth. What has really been working for Reliance, has been the telecom business, has been their retail business, and very recently they demerged their financial services business. Geo Financial Services, and I would think that a lot of this drop has come because that value has moved out of the company and it is now a separate listed entity. So these kind of things could happen going forward because the market has been expecting telecom, retail, etc. to for that value unlock to happen. So it's the new businesses that really keep me interested in Reliance even at this point in time. And the second good thing that two good things actually I would say. One was when Geo Financial Services was delisting, they gave a base price, which I think is still lower than the price the stock is trading at today, which I think is what any good sort of company with good corporate governance should do, because they gave a very realistic picture of where the business stands today. Market may assign any value to it depending on what they see the future as, but they assigned a very realistic value to it. And secondly, the succession plan, because when the company is as large and has as many varied interests as Reliance does, these things could become messy going ahead. So to sort of address the issue now and induct your children into businesses and sort of mentor them. You have the time to mentor them too, and we as sort of investors also get a chance to see them really leading their businesses, and that I think going forward will put them in a better place. So yes, as I said, in a single word, I am positive on the stock.
All right, so that's the view coming in from both of our experts when actually it comes to Reliance Industries, and sometimes you wonder who wouldn't give a thumbs up over the long term for this particular giant. But on that note, we'll slip into a break on this edition of Buy Now Sell Now. Stay tuned. When we come back, we'll start taking your queries, so don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Remember, viewers, you can actually tune in or rather write into us on the WhatsApp number that is flashing on your screen. Do remember to mention your name, the stock that you're looking to invest in. If you're already invested in, mention the buy price, the quantity, as well as the time horizon, which is very important for us to determine which analyst or which expert can actually answer your query. And talking about our experts today, we have Kunal Bothra on the technicals as well as Sharmila Joshi on the fundamentals. A very good morning to both of you once again. And let's kickstart taking all of the stock related queries that we already gotten on our inboxes. This one is coming in from Sudha, who is a long-term investor and already holding Indigo, I believe Indigo Paints, not too sure if it's Indigo Airlines, but Indigo, Som Distilleries, Info Edge and Sun Pharma, not made any money in these counters over the last 2 months, so wants to know whether it makes sense to sell all of them and look at real stocks like Texmaco or even for the matter of fact Power Finance Corporation for at the current term for the longer term, at the current price for the longer term. Sharmila, what's your take? Do you think makes sense, a good strategy just because the stocks are not performing for the last 2 months? Stocks like Sun Pharma, Info Edge, Som Distilleries, makes sense to exit and look at real stocks now, given the fact they've already seen a sharp run up and a mild correction?
So first of all, I don't understand this definition of long term if you are going to sort of lose out in 2 months. Especially when out of that 1 month you've really seen markets correct quite a bit. I think we've seen both large caps as well as mid caps take a bit of a knock over these last 2-3 weeks. So to me, my definition of long term would be minimum 3, if not more years. And I think if you were to look at it from a 3 to 5 year perspective, which is what I think would be a correct perspective for a long term call, then I think the names that you mentioned, out of that, definitely I think Sun Pharma as well as Som Distilleries would definitely be a hold from my side. Coming to Indigo Paints, I think that's a relatively newer company, but again, I think I'm comfortable with it at these valuations. So I would really recommend that you hold all 3 if you are indeed a long-term investor.
Kunal, we have Balan who has a query on a couple of stocks. One is Saturn Credit and the other one is Karnataka Bank. They're making a profit in both these stocks, almost a 20% profit. What is your view on this? Should they continue to hold or maybe sell and now buy something like a Radico, Khaitan or Infosys?
So hold on to both of the names. I think rather Karnataka Bank has been doing pretty well. 29.50 is where the stock is trading right now. Excellent recovery for the stock, and I think for the first time we've seen the stock breaking out of a 10-12 year of consolidation and a breakout, which means that possibly this could not be a short-lived story or a breakout, but this could probably have more upside over the medium to long term. And even for Saturn Credit Card, I think that stock is showing signs of good volume pickup. So far in this last 2-3 months, the stock has come back towards 230 plus mark. So, and after falling down to in 2022 as much as I think 34-35 rupees, which means that the stock should continue to move up higher. So I would suggest to hold on to both of the names.
All right, this one is coming in from Indu, and this one is for you, Kunal. Indu wants to know whether she can look to add Map My India at current levels. She's already holding some shares and she's seeing a profit approximately 35% on those holdings of Map My India. Do you think it makes sense to go ahead and add some more in the portfolio?
Yeah, I think it makes sense to hold on to the stock as of now. If you're looking to buy or average, I would say that maybe closer to that 50-day moving average, which I think is currently at 1650 levels, could be a good point where you may look to average. So stock I think retested 1650 mark a week back, so 1650-40 mark for Map My India. So that was a good point to enter the stock price. But I think you can just hold on to the existing quantity at current levels. The stock still looks very attractive. It's coming out of a consolidation. Hopefully, if you get a retest towards a 50-day moving average, you can probably have a much more lucrative risk reward to average further for the existing quantity which you're holding.
Sharmila, we have Bala from Chennai who has a query and they want to know fundamentally how is HAL as well as Ircon International looking to you for the long term and can they invest at the current price?
The first stock is Hindustan Aeronautics, is that right?
Yes, Hindustan Aeronautics.
So that I think you can definitely continue to hold on. I think the only caveat here that I would like to mention is that since these are those stocks where the order sizes are large, but the gestation period of these orders is also large. So for them to really translate into earnings takes quite a while. But given the current approach to this space where we are really trying to give that whole Make in India initiative and the kind of orders that a lot of defense companies are getting, and Hindustan Aeronautics within that space. While the valuations look high, I think definitely you will continue to hold on to the stock. But as I said, bear that in mind that all the order wins, etc., that you hear, and that takes time, in translating into real profits. I'm sorry, I didn't get the other stock.
Ircon International, and the viewer also wants to know, should they look to add both these at current levels as well?
So Ircon International, once again, I think you can hold the stock, but obviously I think I'm more positive on HAL than Ircon. But yes, I think given the fact that the kind of numbers Ircon has given and the valuation it's at the moment, again slightly on the higher side, but you can continue to hold. When it comes to adding new stock, fresh stock, I think wait for corrections to add this. Because as I said, I think that if you are in it for the long term, then you have to bear in mind that the gestation period of such orders tends to be long. So try and buy the stock on dip.
Now coming to you then, this one is coming in from Samrat and he has 200 shares of Samvardhana Motherson at a price of around 100 rupees per share. Wants to know how long should he stay put with this particular counter, and also is it the right time to enter Delta Corp? Delta Corp definitely is moving on back of news flow. Do you think it makes sense to actually go ahead and venture into this stock given the fact that it is dependent on what's happening apart from on the charts?
Yeah, exactly. I think that's the point. It's marred with so much of news flow around it that you see a gap down of 10%, 15% for the stock and then a further selling pressure. So I don't see any reason why you should be looking to invest into such a kind of a name. At least as of now, it always makes sense to buy these stocks when they get into a reversal, even though you're buying them a bit costly, but the confidence level of making money at the end of the day would be pretty much high for these kind of names. So I would suggest an avoid on Delta Corp. For Motherson Sumini or Samvardhana Motherson, I think I would suggest a hold. The stock is going through a time-wise correction. My sense is that this could probably extend for at least another 2-3 weeks of lull kind of a price action for Samvardhana Motherson. So if you're not in a hurry and not looking at this as a short-term trade, I would suggest to hold on to the stock.
Sharmila, we have V. Ravichandran from Chennai who wants an outlook on Electro Steel Casting. They're already holding 2,000 shares at 27 rupees. It's not a much stock that everyone talks about, but what is the outlook for this? Do you cover this?
So I'm just taking a quick look at it, and in terms of valuation, it seems a little stretched. I think all the good news sort of seems to be in the price at the moment. So I think I would really give this a to my mind, the stock could go up to around sort of 70 levels. So I think yes, you can stay put for the bid.
Okay, the next one that I have is coming in from Megha, writing to us from UAE. Kunal, this one is for you. She wants to know about Precall Limited, if she can look to buy at current levels. She also has Jubilant Food in a portfolio, which she purchased at a price of 490. She wants to know whether she should hold or sell Jubilant. And for Precall, she wants to know whether it makes sense to buy at current levels. Her time horizon is around 6 months.
See, Jubilant Food, I would recommend to hold on to the stock in case if the stock say dips down towards 520 to 500 range. That's actually a good point to average further for Jubilant Food because the stock seems to be coming out of a major correction and is now showing all the right ingredients of a reversal as well as a breakout for itself. So you should probably wait out for that opportunities of to try and buy back or add Jubilant Food. I think it's a good stock which you can hold even from current levels. Precall on the other hand, I think the stock has done exceptionally high at 320 plus levels. It's very difficult to give a buy over here because the stock has not shown any major correction. I think if I'm not wrong, this is the 14th or the 15th straight quarter of positive price gains for Precall, and the stock has moved from 50 rupees to 300 plus mark. So you can expect that the stock may get into a correction, but I think what you can ideally do is to wait out for that phase of correction for the stock price to buy, because it's very difficult to preempt that how long can the winning streak continue for Precall on the quarterly charts. It's a good stock, but I think buy on dips could be a better strategy.
Okay, Sharmila, we have Divya who is holding InfoEdge, Indigo and Gland Pharma. They're making a bit of a loss here. They've not mentioned the percent of loss. But should they book their losses here, the slight bit of a loss that they're making, and buy something like a Union Bank or a Dwarikesh Sugar for 12 months to 24 months time period holding?
So one's InfoEdge and which are the other two?
InfoEdge, Indigo and Gland Pharma is what they're holding and making a loss. They want to look to buy something like a Dwarikesh or Union Bank if they book the losses here.
So none of these names I like particularly for different reasons. But perhaps at this point in time, definitely I think for Info Edge and Indigo, it would be a hold. I'm not so sure about Gland Pharma, though you are seeing a sort of a revival in pharma names as a whole. Gland has been a bit of a disappointment, but I believe even that's sort of coming around. So if you have that long-term view, you can continue to hold. And definitely, I think as compared to the names that were mentioned to buy in place of these, I think I prefer the current names that the investor is invested in. So I would recommend it.
Okay, on that note, viewers, we're going to slip into a very short break, but don't go anywhere because after the break also, we'll be returning with all your stock-related queries. Welcome back, and you're watching Buy Now, Sell Now on ET Now. This is a show where we solve all your stock-related queries. So you can send us all your queries on the WhatsApp number that will be flashing on your screen. But let's keep it going then with the queries. And Kunal, this one is for you. We have the query on Varun Beverages. Sridhar is holding 70 shares at 912 rupees per share. At what price can they look to sell the stock? Should they sell or continue to hold it maybe for a medium to long term?
See, I think the stock has given a breakout today on the short-term charts. If I'm not wrong, it's managed to give a breakout about that 925, 935 barrier, which was the resistance for the stock price. Now, you can, in this kind of a market, it's very difficult to preempt or rather to trade on a breakout. It always makes sense to buy these when they are about to get into a breakout or when they're getting into a mean reversion or maybe oversold nature like what we discussed for Reliance Industries. So the only concern with this kind of a market scenario and the stock is the risk reward, because when you're buying into a breakout, it's very much possible that the stock may not show any kind of a follow through momentum for the next couple of days. So wait out for maybe another couple of days. In case if the stock dips down towards say 945 mark, 940 mark, that could be a slight better point to try and enter the stock.
Alright, this next one is coming from Daulat Basha. He's writing to us from Chennai. He's currently holding 300 shares of Ashok Leyland is what he's saying, Sharmila. But he wants to know whether he should stay put with it or exit this counter. His buy price is 140 rupees per share. And given the fact that he's not mentioned his time horizon, I'll take the liberty to ask you that query about Ashok Leyland. Ashok Leyland, no doubt today is subdued the trading session, but if you look at the performance of the stock over the last 2 years, spectacular performance coming in for Ashok Leyland. Last 3 months is up 8%, but over the last 1 to 2 years, the rise has been spectacular. Do you think that this price rise also is reflective of what's happening fundamentally with the counter, and fundamentally stay put with this one?
Absolutely. In fact, this is a stock that I like. So I hope, in fact, that the investor is long term and decides to stay with this. I think the only trouble is it's been stuck at this sort of 170, 180 price range for a longish time, and maybe the concern arises out of that. My target on that would be closer to 220. Without doubt, I think a lot of this, the move that we've seen, as you said, is because of fundamental reasons. They have sort of over the past 4-5 years restructured their balance sheet, so they're in a much better place. And I think even if you are looking at mass mobility going ahead, and this whole their whole move into electric vehicles and double-decker electric vehicles. I mean, if you stay in Mumbai, you would have seen them on the roads. They're beautiful air-conditioned double-decker EV buses, which are replacing the old double-decker buses, which were phased out, I think, just a couple of weeks ago. But if you've seen these new buses, I think, those look really attractive. And overall, I think, the outlook, the way the company has structured itself and the products that they are coming out, to my mind, this is a great stock, and I think that we should most certainly have a long-term view on it and stay invested.
Okay. Kunal, this query is on MTAR Tech, and this one is for the short to medium term. Now, Jayakrishan from Kerala is holding it at a price of 2,685. Should they continue to hold, sell, or maybe look to average now? And if average, at what levels?
See, I think you should hold on to the stock. Now, this is what I was talking earlier, that if the stocks get into a mean reversion or they come back towards the respective 50-day moving average or say 100-day moving average or 200-day moving average, depending on what kind of time frame you are looking out for to hold the stock, I think that's a good time to enter the stock. Now, for MTAR Tech, the stock has corrected from 2,900. Yesterday, I think the stock had come back towards 2,400 marks. So that's a decent 500, 600 point correction for the stock price from its recent swing highs. So maybe closer to 2,500, 400 is where you can look to average the stock price. It also coincides very close towards its 50-day moving average. So even that would probably be a good support zone for the stock price. So I would suggest to hold on and average closer to 2,400 for Infratech.
All right, this next one is coming from Umesh Gupta from Vadodara, and this one also is for you, Kunal. He's holding Hudco, about 2,000 shares at a price of 92 rupees per share, IFCI 2,000 shares at a price of 42 rupees per share. And he's mentioned the fact that he's been holding on to these counters for the long term, in fact. So now with the upsurge in the prices recently, he wants to know, should he go ahead and exit the counter and in a way book somewhat lesser loss than he would have earlier?
See, for Hudco, I would in fact suggest a hold, because the stock has shown signs of a very strong volume price breakout few days back. Even though, as I said, that the stock post the breakout have not seen any major follow through. That's because of the nature of the markets we are into right now. But then eventually these stocks would probably get into a decent uptrend. So I would probably suggest a hold on Hudco. IFCI, on the other hand, I think what you should ideally do is that maybe closer to 21, 22 mark, you can look to average further, bring down your cost price to maybe 30, 35 odd range, and then hopefully closer to 28, 29 mark in case the stock rallies and extends this rally. That's a good point where you may look to exit. So bring down your cost price for IFCI, look to average on the downside, and then maybe look to exit closer to 28 to 30 range.
Sharmila, the next query is from Patrick from Mumbai. They're holding 2,000 shares of ISGC SGEC at for 8 years, the last 8 years, at a price of average price 270 rupees per share. For the long term, should they actually continue to hold this stock? What is the fundamental that you're picking up on this one, or maybe they should switch to something?
I'm sorry, I missed the stock.
Pardon?
The stock name.
It's okay. She's saying. Sharmila? The stock is SGEC.
SGEC.
ISGEC.
Oh. No, I'm sorry, I don't.
Kunal, do you have a view on this one?
Yeah, I think SGEC, heavy engineering, that's a stock which trades at 720 if I'm not wrong. It's a decent chart. The stock has been shaping up quite well over the last quarter, from 450 levels to 750, 775. The stock made a high at those levels. It's consolidating. So looks to be a good chart. Liquidity, of course, is an issue because the average trading volume is around 10,000 or 15,000. So you should ideally drop down your position size over here. But I think at current levels of 720, you can look to maybe add or average few more shares for SGEC.
All right, on that note, we'll actually cut across and listen in to what TV Narendran, who's the MD at Tata Steel, had to say. He's speaking at the IMA convention.
Should be willing to put in money where the mouth is. I just want to add maybe I'm a little outside on this because I've been in sectors where this is not the center stage for it because we're in service. But just as an outside, I would say we need to be careful about the fact that if it's too much of a push, I think people are going to set themselves high targets because that's what they need to articulate. And then they're going to pull back because it's always 10 years later. So my sense from the outside is we need to be clear that this is something everyone, the whole organization, a government and environment takes for granted. Otherwise, there's going to be pullbacks with large statements right now. And then I think the British Prime Minister has just done that 5 days back, right? So I think if you look at some of those, that's one. And second, it should not be that consultants are going to make $1 billion of revenue right now in this sector, just consulting with everybody, knowing that every 2 years the benchmark is going to change.
So that's a rising sun opportunity, right? So if nothing else, you can become a consultant. So that's going to be good. But you know, the fascinating thing about if you talk about trends of the next decade is competition, and you referred to it earlier, Narendran, but Ronnie is a great example of it. Competition for any sector and any company will come and can come from somebody who's not in the sector at all. You entered the education sector, Ronnie, and I'm sure you upset a lot of people and several other companies. Do you see that as a very significant shift that, you know, the medical wearables we have, they came from tech sector. So the medical devices industry is competing with a bunch of people who have no experience or legacy in healthcare. How much of that is going to disrupt business models?
So I would look at competition in two ways because I think I've come from non-legacy businesses, and whether it's been in media.
5-6 weeks, we've added new flights from Mumbai. We started operations from Mumbai to Nairobi. We started Mumbai, Jakarta, and as recent as this weekend, we've launched flights from Delhi into Tashkent and Almaty. So we've expanded from a little over 20 destinations to 32 now. Next month, early October, we'll start flights into Hong Kong, so we'll be back in Hong Kong after the COVID time. And we have plans when the Airbus 321 XLR would be coming in to further expand our wings international. And in fact, it's not only new destinations, but it's also a lot of new routes. I mean, in August itself, we started new flights from Ahmedabad to Abu Dhabi, from Goa to Abu Dhabi, from Ahmedabad to Jeddah. So we keep expanding international footprint, both by new destinations as well as new routes.
And talking about airfares, because that is something which always is something liked by or they wanted to hear about airfares going forward in festival season because of lack of one airline. It's not there and trouble with another airline. Do you think airfares going up? What's your take on that?
You know, there's always seasonal fluctuations. Did you try to book a hotel already at the peak season? Did you see what's the price of that? So there's always going to be fluctuations of airfares. I think for Indigo, one of our very fundamental customer promises affordable fares, and that's what we keep there. So yes, there will be seasonal fluctuations, like there always are. At the end of the day, we also see prices of fuel going up. But at the end of the day, the Indigo customer promise, affordable fares, is and will remain a very strong pillar of Indigo.
Well, you took a board's permission to buy 10 A321 neo planes. Also, you have taken some on lease. So what is the plan as far as these new aircraft are concerned? And what possible timeline is there when you would like to place order for the new planes?
Well, recently we have placed an order of 500 aircraft, the largest order in the history of aviation from a single airline with a single vendor. So we're not having any sort of new plans for that. That's such a massive order. What is important is that gives us continuity and stability basically for the many years ahead. And aviation business is a long-term business. So we need to prepare the airports, we need to prepare our training, we need to prepare our pilots. So that's all a long-term planning. So we are having made these investments in these announcements in order to create that long-term planning. I mean, for the years ahead, think about it. For the years ahead, each and every week, Indigo will receive a new aircraft. So every Monday, we realize a new week, new plane is coming. So that's a very important part, and that will help us to continue to grow forward on that expansion and that ambition to grow Indigo both domestic as well as international. The temporary leases you're referring to, they are leases to deal with some of the supply chain challenges we're having and to make sure that we can continue to serve the market and yet having the planes available. And due to the supply chain challenges, there were less planes available than we had initially expected, and therefore these temporary leases are there.
And Pratt & Whitney engine problems, how have you dealt with them so far? How many of the grounded are so far?
Well, I think so far Indigo has had a very, I would say, hands-on approach in terms of creating mitigating measures. So what we have done is we have temporary leases. We even have the 777 to Istanbul from both Delhi and Mumbai. So we've done a lot of measures actually in order to make sure that we could live up to our last capacity guidance. If you see our results in the first quarter of this year, we have again reconfirmed our capacity guidance. Of course, we're speaking with Pratt & Whitney and are in close contact with Pratt & Whitney to have a good understanding what's there in the months ahead. But Indigo, I would say, always a little ahead of the pack, so we are sort of preparing already now for what next mitigating measures we should take.
Last two quick questions. Talking about food and beverage, well, you have introduced new meals and your food and beverage margins are being talked about. So going forward, is that something you are going to, more focus on to bring profitability?
You know, the change which we did for our food and beverage had nothing to do with profitability. The change which we did was driven by the fact that we actually wanted to achieve a couple of things at the same time. First of all, we have seen a lot of growth in our corporate segment. So some flights we have over 100 corporate customers and they all need to be served. So we need to make sure that we have a service on time. Secondly, it needs to be even more affordable and hassle-free. So we have reduced some of the prices of our customers and also made it hassle-free. That means if you don't decide prior to your flight what sandwich or what thing you want, you just get something which is prepared by us, which is the case actually at many other places. Thirdly, we have created actually a lot of focus on sustainability, so reducing a lot of waste which we're having. And with the growth of the airline and the growth of customers, that was another important fact in that new catering proposition.
One last question on two things happening. One is Akasa Air pilot problem. If you can talk about how this problem is between pilots, and do you support what the airline is doing, because the pilots have quit without notice. Also, a leasing watchdog has downgraded India. How these things affect you or maybe industry?
Yeah, as a matter of principle and policy, actually, I prefer not to comment on any things at our competitors. I mean, Akasa is having its own set of challenges, and it's for Akasa to react on those challenges. I think more broadly, and when you speak about what's going on in the aviation industry, of course there's a lot of growth with a lot of dynamics which are happening there. So again, I prefer that for Akasa to react on. And your second question there?
Aviation leasing watchdog has downgraded.
Well, it's a bit a similar thing. It's driven by what happened with Go First. Again, I leave that to Go First. We have our own contacts with the leasing firms. We have our own communication with the leasing firms, and Indigo just continues. And Indigo has throughout the year demonstrated to the leasing firms to be a very trustworthy partner and partner in business. Throughout the COVID times, we continue to take planes, we continue to build, and we have, as I said earlier, a massive plane order placed already. So we continue to work with them, and we do that from our own philosophy and our own track record of operating.
Thank you, Peter, so much. Thank you.
You're most
All right, so that's the exclusive conversation that our colleague Sumit Chaturvedi had with Indigo CEO, talking about the issue, the Pratt & Whitney engine issue, where the company is saying they're in continuous talk with the company. Also, they've gone ahead with leasing of planes in order to meet festival demand as well as the year-end demand, and also spoke about the airfare. So that's an exclusive conversation with Indigo CEO. But on that note, we slip into a break edition of Buy Now, Sell Now. When we come back, we continue taking your queries. Don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now, and let's continue taking your queries. In fact, let's kickstart with the rapid fire then. The first one that I've got is from Rajiv, who's a senior citizen. Kunal, he wants to know about REC and Indus Towers for a period of 6 months. Does it make sense to invest in these counters?
Yes, it makes sense to invest into both of these names.
Sharmila Seema wants to know Adani, Wilmar and Symphony, are they a good bet for the long term currently?
Yes,
All right, Pratiksha from Oman wants to know about Bearcrop, BASF and SRF making loss of around 10%. Kunal, in these holdings, makes sense to stay put with them for the next 6 months or some other strategy?
Yeah, hold on to it for the next 6 months.
Kunal, Sridhar wants to know if they can look to buy ONGC 186 call option for this expiry.
I would not suggest.
Okay, this is an 81-year-old senior citizen viewer from Bangalore. Sharmila, Mr. Kamath, who's a long-term investor, wants to know whether it makes sense to buy into Asilia Solutions.
no,
Kunal, we have Rajesh who wants to know on Anupam Rasayan. They are holding the stock at 913 rupees per share. Should they continue to hold this for the short to medium term or should they look to add some more and average out some more?
Exit on rallies or a bounce closer to 920, 930 mark.
Kunal, this one is a fan of yours, Mr. Subba Reddy, who's written to us. Tilak Nagar Industries, 200 shares at 200, as well as KPIT Tech, 100 shares at 1,100. Should he add further or exit?
I think you should add both of these stocks. Look very attractive in terms of current price juncture.
Sharmila Bisaka, who's a long-term investor, wants to know they're holding 10 shares of IndiaMart at 1,960 and 60 shares of Hindalco at 420 rupees. Should they continue to hold them or maybe book profits?
I think yes, hold both.
An easy one, Kunal. This one is coming in from Sham from Nasik. Can Bajaj Finance go to 10,000?
Hold on to it. I'm not sure whether it can, but I think I think with respect to time, I think the stock should perform very well going forward.
Sharmana, we have Subramaniam from Chennai who has 200 shares of NBCC at 57. What is the outlook on this one in the medium to long term?
Not very positive.
All right, just squeezing in one more. Kunal from Dr. Zeenat Kausar from Ranchi wants to know about Orient Paper, 300 shares at 50 rupees per share, and Power Grid at 205. What should she do?
Hold on to both of these names.
Okay, and that was the last query that we were taking on the show today. So thank you so much, Kunal, as well as Sharmila, for giving us your expert advice and solving all our viewers' stock-related queries. But with that, we are absolutely out of time on this edition of Buy Now, Sell Now on ET Now. It's a goodbye from Cheryl, myself, as well as the team who put this show together.